Hello everyone and welcome back to the Common Sense Crypto channel. As with you always, this is Rich doing another video today on XRP. So I hope you're all having a wonderful day today wherever you are in this great world. We're gonna talk about XRP. You know, a lot of people said you are so much happier in your videos lately. Well, when you look at the price of XRP and it's sitting above $1, you're usually pretty damn happy. But we've been waiting for this for such a long time, and it was getting very frustrating, showing you all the connections that were being made all around the world. And people think, well, those connections don't mean shit because the price is still sitting at 60 cents. Finally, now we're going to see why those rails that were getting put in place were so important all along. All we're waiting on is regulations. That's it. Then we start to get the mass adoption. This comes from Smoke. Ripple uniquely positioned between permissioned and trustless. This FT Partners Research publication maps crypto companies based on factors such as decentralization, audience, and use case. Ripple stands out in the bottom right of this document, uniquely positioned in the middle of permissioned and trustless blockchain companies. This placement underscores Ripple's distinctive ability to bridge permissioned systems with decentralization, with a strong focus on institutions. This balance allows Ripple to meet the needs of banks and financial institutions while driving blockchain adoption. As the core of all Ripple solutions, XRP is strategically positioned to become a key asset in facilitating transactions between traditional institutions. Ripple was always thinking ahead. They had to place themselves perfectly so they could bridge everything together, and that's what's been happening. That's why those rails are being put in place all around the world. Because once we get that institutional adoption, it's going to quickly lead to mass adoption. The big boys are adopting blockchain quietly, but in big size, below the fold of the internet search engine. The successes that banks have made with blockchain technology behind the scenes have yet to be disclosed to the general public. Take a listen to this.
See in that space in particular over the next year?
Well, as you mentioned, it's also yield-bearing stablecoins. Stablecoins kind of has a wider definition, which also is a problem because we need to narrow that definition for people to really create standards and grow. But money market funds that are tokenized, we've seen that already come to fruition in two different places. First, Franklin Templeton, they created this, call it Benji app, where they've tokenized a money market fund. And interestingly, because it was tokenized in such an easy to use interface, that particular money market fund actually within the first month doubled their assets because everyone was using it because it's so easy to use and there was an interest in getting more yield at the same time. JP Morgan working with BlackRock, they've also tokenized a money market fund. So that's a perfect example of like adoption, product market fit, and unfortunately it goes below the fold in terms of the search engine headlines because everyone's so focused on just hardcore crypto stuff, whereas the call it big boys are actually adopting the blockchain technology below the fold.
So as they adopt the blockchain technology, eventually they'll start utilizing the cryptocurrency associated with that blockchain. Same way you see Archax wanting to bring that trillions upon trillions of dollars in real world assets to the blockchain. But later, those assets have to move. Something has to move them. When it comes to the XRP ledger, anything that moves across the ledger, XRP moves it. And that's how we will eventually get very, very rich. You know, I want to see Brian Brooks as the head of the SEC. I'm going to play this clip and it shows you what you're invested in. You are invested in the technology itself. Take a listen.
So the characteristic of Web 1, if people remember their original AOL account, was an ability to look in a curated walled garden at a set of content that was not interactive but was presented to you on AOL the way that Time Magazine used to show you the articles they wanted you to see inside of their magazine. Just you could see it on a screen. The innovation of Web 2 was that suddenly you could not only read content, but you could also write content. This is when the blogosphere became a big thing. People remember this from the late 90s, the early 2000s. The reason for the centralization of the internet, of course, was that all of that activity was being monetized by a very small number of companies. Facebook, as the chairwoman mentions, Google, and 2 or 3 other companies. What makes Web3 different is the ability to own the actual network. And that's what crypto assets themselves represent, is an ownership stake in an underlying network. So when you hear people talk about, for example, layer 1 tokens, what they mean is this is your reward for providing the ledger maintenance services, the computing power to the network that on Web 1 and 2 was done by Google, right? So now people in my hometown of Pueblo, Colorado can actually own the Ethereum network, but they can't own the internet. That's owned by Google and a few other companies. That's what the project of crypto is all about, is allowing people to directly own the networks that have native assets that are supporting it, and that's the nature of decentralization.
So we own the XRP ledger, is what Brian Brooks is saying, because it's no longer centralized. It's not owned by these massive corporations. We beat those corporations to the crypto space. The first time ever. I stress that because you don't know how lucky you actually are, how fortunate you actually are by getting into crypto when you did. Now you own a piece of the XRP ledger, and anything of value that comes onto that ledger, the cryptocurrency that you're holding has to move that value, which is going to make you a lot of money. And Brian Brooks, honestly, I want to see him as the next chair at the SEC. And that came from Riz. South Korea is aiming to significantly boost its GDP by 2040, with projections suggesting it could become the world's 7th largest economy. South Korea is leveraging RippleNet and blockchain technology to enhance cross-border payments and innovate its financial sector. A recent policy framework outlines strategies for smart regulation and increased participation from financial institutions, aiming to boost economic growth and competitiveness by 2040. Now, once Korea starts utilizing RippleNet and XRP, I think it's going to happen a lot quicker than 2040. I think we're going to see a massive boom around these cryptocurrencies over the coming months, but we're going to see a significant boom over time. And as it continues to build out and grow, we're going to watch the value, the prices of these cryptocurrencies rise over a long period of time. That's that utility run I'm always talking about, because we don't know how long that's going to last. I expect it to last years, not months, years. DeFi is still in the early stages. Once full regulations have been adopted, you will not know the difference between DeFi and CeFi unless you learn it from now. Take a listen to what he says. This is all part of being your own bank.
We bring DeFi to the next level?
Yeah, to bring DeFi to the next level will require a couple things. So as I mentioned on the panel, I think DeFi is still missing that killer app, right? Borrowing and lending as it is done currently is very medieval, right? You have to collateralize borrowing and lending. That's not really efficient. That's not going to scale. People want to borrow in an uncollateralized way. So the only way you can do that uncollateralized is to actually do a credit review. Well, you can't really do a credit review and have anonymity at the same time. Perhaps maybe with decentralized identity solutions, that could be possible. So very much, we're still prototyping. We've shown that the technology works, right? You can do trades, you can borrow and lend, and ultimately you can create real businesses on top of it. But we haven't seen that next level that leads to that evolution.
You will be creating your own bank. You will be loaning out your XRP and getting monthly interest off of those loans. And that's going to come with institutional adoption. But you're also going to be able to borrow without collateral at some point. Now you're starting to see why that just happened on the XRP ledger. That decentralized identity is so important because it leads to no credit checks or credit checks based on your credit background that's tied to your digital identity. Same reason that banks are leaning in this direction. It's going to lead to no collateral loans. And it's also going to lead to lending for some people as well. You will eventually become your own bank. This is always what I pictured as an XRP holder. Ripple, the global clearinghouse of the future for all cross-medium transactions due to Ripple's patent. That's a US patent for ODL. But it also has a global counterpart patent that is worldwide. The World Intellectual Property Organization, and it's protected across the 193 member states. So Ripple created that patent, and that was a very strategic move because now it has global reach. And that's what I said all along. You know, people kept worrying about the Ripple versus SEC case, but what I was watching happening at that same time is Ripple becoming a global company and expanding out all around the world. But they were still gaining those money transmitter license here inside the United States at the same time. Sure, the SEC slowed Ripple down and held back the price of XRP, but now it's almost time for everything to go live. Now things are about to change going into 2025. And that's why I said anybody who's selling their XRP now, they just don't know what they actually hold. People that are selling now and people that are going to sell at an all-time high of $3.84 are soon going to regret it because XRP is built to be an easy 4-5-digit cryptocurrency when it's moving the world's value. I'm not even going to say it's going after all the money. It's going after all the value as well. All those tokenized assets. First it was Luna. That was virtually risk-free. And now this. Unforgivable. Worst timing possible. This advice doesn't even make sense. XRP outdated. What would he say about Bitcoin or ETH? I'm personally staying far away from Raw Paul. Do as you wish. Remember he said stay away from Cardano and XRP. And look at what happened with XRP now. It's melting Raw Paul's face. This guy was totally wrong. And he's going to continue to be wrong going forward. I still think he was paid to shake people out. This is what I'm expecting as far as mass adoption. Take a listen to this.
The real missing link for all of this for adoption is a easy to use point of sale system for a merchant where they can take multiple cryptocurrencies and even gold and silver in physical and even tokenized form that gives them enough combined buying power so that they're actually able to sell to enough people to make it viable. But yet is easy to use and can kind of convert whatever the multiple currencies they're taking into their, say their reference currency that they're the most interested in using. And so I'm working kind of behind the scenes on building that, or if I can, partnering with somebody that already has it, but it needs to be open source because the history of this space is littered with companies that have been put out of business by the government. Anything that has a centralized point of failure is a problem, and that includes wallets and point of sale systems. And so that's why I'm kind of doing this comprehensive approach right now.
That is what I picture for mass adoption. When you could walk into a store and pay the merchant from your digital wallet and pay him in XRP or pay him in XLM or XDC. That's the future. And that's when all the normies out there will finally realize that crypto is just not imaginary internet money or magical internet money. They will actually see it as a true currency, something that has real value. You know, I still hear from people saying, that's not real. Crypto isn't real. Well, it sure as hell is real when you cash it out and move the money from the exchange to your bank account. That's how real crypto actually is. There's going to be people cashing out millions of dollars over the coming months. New millionaires are going to be made off of crypto, yet people still don't get it. The normies still have not figured out that crypto is way better than fiat. Anybody still saving their money in a bank account, they're eventually going to lose their money. The banks have to collapse going into the digital system because they need to consolidate the banks. It's the same reason you see the brick and mortar bank branches closing already. And the banks that are shifting into the digital age, a lot of them will make it through the consolidation. If they're pushing digital wallet and they're pushing crypto assets, because I think that's the next step for the banks. I think that's going to come once Trump goes into the White House, because they're going to instantly put that SAB 121 in place. And all of a sudden, banks are going to be offering crypto, you know, they're going to be saying, listen, you could buy these assets and get this amount in returns. You could, instead of getting less than 1% yield on your money, now maybe they're offering 5 or 6% if you buy certain digital assets. I think that's the next step for the banks. But I think this will lead to mass adoption when you could actually spend crypto in the stores. In my conversation with Judy Shelton, who serves as economic advisor to President Trump during his last presidency, the U.S. should combine the strengths of gold-backed systems with blockchain technology's benefits, integrate stablecoins into future advancements. The United States should establish Treasury Trust bonds as a gold convertible instrument. The Federal Reserve should not create a central bank digital currency. This is what monetary integrity looks like. I think we're going to a gold-backed system. The central banks did not buy up all this gold for no reason. We're going to go to a time where everything's regulated, everything's transparent, and all of the fraud is going to disappear. That's why I don't think Tether has a future once we get stablecoin regulations here in the United States. Because any country that's tied to the US dollar, they're just going to adopt whatever regulations that the United States comes up with. And now we are going to... Tether was great under the Biden administration. I think a lot of money laundering happened with this current administration. Trump's administration is going to be much different. Look at the people he's surrounding himself with. We're not going to go back into what we have now. We're going to push forward. Everything is going to look so much different. Everything is going to be compliant, regulated, transparent. And that's why I said Tether could be the next black swan for the crypto space. But cryptocurrencies like XRP, XLM, utility-driven cryptocurrencies, and anything that's not being propped up by Tether, it's going to bounce back very quick, especially with regulations. And you're going to see the money shift. Institutions are going to be putting their money into anything that passes regulations. But, you know, it is going to be a crazy time when it happens. But it's also going to be a very exciting time. And us, as XRP investors, we're going to make a shit ton of money. But until it all happens, stay patient, stay positive, and let's get rich together. With that said, I'm going to wrap up this video. I want to thank you all for watching. I appreciate all of you. I'll see you in the next one. Have a great night.